Welcome to Impact. Headlines. The new interim government formed in Bangladesh. Eurozone economy grew 0.3% in second quarter 2024. Bank of Japan likely to hike interest rates further. The Nobel Prize-winning economist Muhammad Yunus has been sworn in as the head of Bangladesh's new interim government. The new government aims to restore peace, stability and prepare for upcoming elections. The violent protests over several months resulted in the deaths of over 500, of which many were students, resulting in the resignation of former Prime Minister Sheikh Hasina. Analysts estimate that the curfews and shutdowns are expected to cost the economy around $10 billion. Impact on Sri Lanka. Political unrest in Bangladesh could have a direct impact on Sri Lankan businesses, particularly those with apparel manufacturing and exporting facilities in Bangladesh. According to Dr. Kingsley Bernard, EDB chairman, there could also be an uptick in orders in coming months due to the current political instability in Bangladesh. As a result, India and Sri Lanka are likely to become the preferred alternatives for textile manufacturing. The Eurozone expanded 0.3% in the second quarter of 2024, maintaining the same growth rate as the previous quarter. Despite the modest growth and the exit from a prolonged recession throughout 2023, the economy remains cautious due to ongoing geopolitical tensions and the upcoming presidential elections in the US. Spain led the growth with a 0.8% increase, followed by France and Italy. On a related note, the European Central Bank, ECB, has hinted at further rate cuts in the near future. Impact on Sri Lanka. The Eurozone is a key market for both Sri Lankan exports and tourism. During the first 6 months of 2024, exports to the European Union increased to $1.3 billion, remaining flat compared to the same period a year earlier. A growing Eurozone helps boost Sri Lanka's falling export earnings and also encourages European traveller spending. Bank of Japan, following its landmark rate hike last month, has hinted that further rate hikes are likely, eventually increasing the rates to around 1%. This is a significant move as the US and other major economies are preparing for rate cuts. The anticipation of these moves, combined with a dismal US unemployment report, caused a spike in the yen and contributed to global market turmoil last week. Impact on Sri Lanka. A strong Japanese economy will have a positive influence on Sri Lanka as Japan is a critical partner for foreign direct investments. Recently, the Japanese International Cooperation Agency agreed to resume all previously suspended projects in Sri Lanka. Additionally, such news could help weaken the US dollar as funds may flow away from US to Japan, which can help Sri Lanka reduce its expanding trade deficit. And that's the wrap for this week. Subscribe to our YouTube channel to stay updated on the latest developments in Sri Lanka.